This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome, and you are listening to another dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is June 12th, 2020. This is show number 54. Well, Nick, the market took a major hit yesterday, down 1,800 points. Where does that leave us?
Well, we did take a big hit yesterday, and it was on volume, so you definitely want to be a little bit on the more cautious side right now. I think we probably are in the midst of a pullback. Even today, we had a gap higher open. The spiders were up sharply. The Dow was up over 500 points, and now we're basically negative to flat. The NASDAQ is actually negative by 50 points. So it looks like we got a pullback underway, but that's not unusual to see. The one thing you have to concern yourself with a little bit is that we did have a wide range sell-off bar from a high, and anytime you get that with volume, that can also turn into something more. So right now, it's not all that big a deal, but going into Options X next week, I think we had really a lot of excess in the marketplace at that time. I know we talked about yesterday being into resistance, but you also saw a lot of froth out there with a lot of these micro cap biotech stocks doubling and tripling. We talked about that Nikola stock making that parabolic move, and a bunch of other charts did that. So, the market's going to take that out, and we'll see what we do by the end of Options X next week.
Yeah, so we're due for a pullback. I mean, we get this massive increase, like the fastest, biggest on record. So we're kind of due for a pullback. Of course, the naysayers are saying this is the beginning of the retest of March's lows.
Yeah, I don't see that happening. Could we, go back down a bit from here? Sure, but I don't see the March lows getting retested.
Yeah, so we're just having this little consolidation period then, huh?
Yeah, it could be more than consolidation. Like I said, we did have a good sell-off yesterday. There's no denying that. The volume was high. So you have to respect a pullback. You might get a pullback, minor correction, but I don't think it's more than that. If it does turn into something more, we'll let you know. I'll let you know. But right now, when you look at the market here, we had a lot of call options out there. Put call ratio is very, very low. We hit a lot of resistance levels. It's actually good to see, in my opinion.
Yeah. So it's a healthy pullback.
I think so. Right now, it's something that needed to happen, and it wasn't happening because of all the central bank intervention, and now we're getting it, and you still got central bank intervention. So, at some point, we'll see the markets come down a bit more, and then we'll see the buyers step in.
Right. So what about our sectors here? Well, gold is holding pretty steady, up a little bit, silver down a little bit, and good movement there.
Yeah, I mean, gold is flat, which is great for me. That's what I really want to see. When you look at gold miners today, they're down just a touch. It's not that big a deal. And silver's down, 1%. So, I mean, it's really, it's not terrible out here. Silver's down 2%, excuse me. But it's not bad. That's what you want to see ultimately. And I think gold, silver are going to be tremendous buying opportunities going forward. Like we've been talking about, you have to let those patterns set up. And once they do set up, they're going to be tremendous opportunities on the long side for both gold and silver.
Yeah, so the VIX turned out to be a pretty good play there, huh?
Yeah, the VIX has had a tremendous bounce. I thought it would get a bounce. Honestly, I didn't think we'd go as high as we did. But, the VIX is even higher today. So maybe it has a little bit more to it. But I'm not expecting the VIX to make new highs or anything like that. At least I don't see that on the charts. But it has had a really good little bounce here over the last 5 days. Yeah,
had a good bounce. So our other sectors, McDonald's is down now. It hit just over that 200 and it pulled back. So it was good timing to get rid of it when we did. And we're going to be seeing a new entry point at McDonald's again.
Well, I'm still holding half of my McDonald's position. I have not gotten out of that. So I took first profit on that, and now I'm holding the second half with a break-even stop. My entry was, around 182. So I still have some more wiggle room. If it stops me out, so be it. I did get stopped out of my second half position of Coca-Cola, but I made money on the first half. And that's why I do those trades like that, where I take half off the table. I let the second half run. If it comes back down and it gets me out, so be it. I made money.
Yeah. So there's definitely a strategy there. So at least you're winding up with something, right? Always.
And if it runs to where I think it ultimately can go, I mean, just think about the percentage gain. It's tremendous. So again, that's why we want to let our winners run. We want to cut our losers short. But ultimately, if we get a chance to take some profit and let that trade go with very little risk involved, meaning a break-even stop in place, then we're playing with the house's money, and we want to really capitalize on that.
Yeah. Yeah, hey, and I know a lot of you out there bought McDonald's, and you got in on it, and hey, so I guess we'll have another chance to play that one. So the negativity is back, right? I mean, you're hearing it from kind of all sectors, right?
Oh, yeah. And you know what next week is. Next week's options expiration, it's quadruple witching, meaning you got 4 different asset classes expiring under the sun. The markets were up. A lot of call option buying for next week's expiration. I'm not at all surprised to see what's going on. It reminds me of the last options X, very similar, except it's starting a couple of days earlier.
Yeah, so it's starting earlier. And so it's best, do we sit on the sidelines and watch this play out?
Yeah, sit on the sidelines. I actually went in and took some profits today on my U.S. dollar play. I had call options on the UUP. I made 25% in just a few trading days. And I actually entered a new position on the call side yesterday in Pfizer. And now I'm just sitting back and, letting these charts set up. But they're going to give us some more opportunities.
Yeah, no doubt. No doubt. There's always opportunities in the market, up or down. And so you think by the end of next week, this thing will have flushed out whatever they wanted to flush out, and we'll be looking at resuming or sideways market or what?
Yeah, I mean, I'll know more as the pattern unfolds. Right now, we have about a 4-day pullback after making a new high, not a new all-time high, but we did make a new multi-month, 3-month high. So now we just let the charts pull back. But yeah, as long as we come in and we come in the right way, the markets there'll be an opportunity there on the long side again.
All right. So I guess we're just going to sit back and watch what happens. And Pfizer's looking good. McDonald's really took a hit, though, didn't it?
Yeah, it took a hit, but remember, it's a volatile name, so anytime you get into a stock like this, you got to remember, when I got in this thing at 182, it actually went down to around 167 and then went above 200, like I said it would do. So now we're pulling back and, but it's holding its 100-day moving average, still above its 50-day moving average. Mm-hmm. If you get a rally next week just for instance, if the market makers see that there's a lot of puts coming into the market, what do you think they'll do? They'll shuffle this thing the other way, and then McDonald's will be right back over $200. So, my target on this is around 212. So, I mean, there's potentially still a lot of upside here. Pattern is not broken.
Yeah, so the pullback might indeed wind up being a major opportunity, huh?
Yeah, it could be. And, if I get stopped out, break even, I have levels below where I'll get in again and it'll be cheaper. So, this is trading. You're not going to knock the ball off the cover on every single trade. Some of them you do. And, some of them are home runs. But, not every trade is going to be a home run. But that's why it's called trading. We got to be nimble and you have to be able to adjust when you see things changing in the environment.
Yeah, you got to be ready for the opportunities and flexible, and you got to be willing to change your opinion on the dime, right?
Yeah, absolutely. And the charts guide us. I'm not looking at the news. I'm not worrying about what, somebody's saying out there, or I'm just watching the charts. The charts tell me exactly what to do. I know yesterday we got a high volume reversal day, so I get a little bit more on the cautious side, and I let the chart patterns tell me a little bit more. But, there are a lot of potential setups that are coming along here.
All right, and we're going to keep on top of them all. And, so caution is the byword right now. And remember, we got the quadruple witching hour next week, which the market just seems to ignore now, but it's very real in terms of its effect on averages, etc. So anyways, that's it for this week. Just take a look at Nick's site, inthemoneystocks.com, and the Twitter feeds at ITMS and at Nick Santiago 01 and at Kerry Lutz. And any questions or comments, email us. We'll answer all, KL@kerrylutz.com. Well, Nick, we'll pick up with you on Monday.
Sounds great, Kerry. Have a great weekend.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.